All right, we have a portfolio move to tell you about. Josh Brown adding to Pfizer, something he says is one of the best opportunities in the entire market right now. Tell us more.
Yeah, I mean, this is very far away from what people are doing. This stock is on the 52-week low list. It's actually at a 11-year low. We haven't seen it trade at these prices since December of 2013. What's happening here, in my view, is very simple. There's just no great near-term catalyst for this stock, and as a result, people are coming out of it and looking for other things to do that might be more rewarding in the shorter term. And from my perspective, that sets this up perfectly because I'm looking to be an investor here. I'm not looking for any kind of short-term pop in the stock. I don't even know if I'm done buying it yet, but I added to my position by about 50% yesterday as it was making a new 52-week low. The people that watch this stock, this show, know that I'm usually looking for stocks that are closer to a 52-week high and are exhibiting strength. But I think that this is a very special situation. COVID just absolutely wrecked this company. They went all in on Paxlovid and on the vaccines. Then the disease became endemic. Nobody needs the pills. Nobody cares about the shots. And their revenue was just demolished. That's the thing, though. That's why the stock's in a 60% drawdown, paying almost 6.5% dividend yield. And they made an acquisition of Seagen, which I think is going to have huge potential in the coming years for oncology drugs. So this is a stock that's been around, a company that's been around for 175 years. They've had other issues like this. People were worried about Viagra coming off patent in 2017. They got through that. Before that, people were worried about Lipitor in 2011. They always find a way to rebuild revenue growth and reorient the company. I don't think this time will be any different. So I am a buyer under 30, and we'll see what happens in the coming years.
All right, it's getting a move as we're having this conversation. You have a comment here?
Yeah. Hey, Josh, I'm sure you're not surprised. Pfizer is something that certainly comes on my radar screen a lot. I'll bet on Surat's too. I see what you're seeing. I agree with the fundamental picture. I think you're going to make money. The thing that's holding me back is that dividend yield. That's a lot of their free cash flow that they're paying off in dividends. Does that leave them enough for R&D? Are you worried that maybe that high yield is signaling that it's too high?
I'm really glad you asked that question. In a series of recent presentations, not only have they committed to substantial R&D, but in addition, last year they froze the buyback. So this used to be a dividend plus buyback story, shrinking the float. They stopped doing that. The Seagen acquisition is massive, very expensive. They're going to have to deleverage the balance sheet to get back to buybacks. But I do believe they'll continue the dividend, and then I think they'll add this new leg to the story when it's appropriate, going back to buybacks. And if you look at the history of shareholder return here, they've done a really good job historically with that capital allocation decision. So I think they can do all of these things at once. I don't think the street is really giving them that much credit that they will. So maybe that's why there's an opportunity if I end up being right.
All right. Well, as we said, stocks on the move, and we'll continue to watch it from negative or flat line to a nice little move by about 1%.
Hey, ladies and gentlemen, welcome to Stocks Intake, where we review different stocks, have a look at their fundamentals and even their technicals. So today we're looking at Pfizer. Josh Brown says he's buying Pfizer. Pfizer has reached its all-time lows, and guess what? It's still breaking, going lower and lower and lower. The Keltner channel just signifying its downtrend, its bearish trend, and it just broke out of its lower channel on the Keltner channel, and even broke lower on its linear regressional channel over here. You could see it's been trading sideways. It's been trading sideways the whole day, going lower and lower. After that, after about the 7th of March, it's been lower and lower and lower, going lower, and there is a significant bearish trend on this stock over here. If you look at it over the last 3 years, its highest was during the peak of COVID, when it reached about $61.19. That was its its highest level, and then after that it had a low of about $45.74, and then it created lower lows, and no higher highs over here. It then went on the 10th of October to go 41.75, which was this new low, and then it went down even further to 36.85, and now it's right down here to $26.78. How low is the stock going to go? Nobody knows. There's a significant bearish trend on this. It's low on its 50-day moving average and its 200-day moving average as well. Over the first the first 1 year, the last 1 year, it's gone down 33%, and over the last 5 years, it's gone down 35%. So there is a significant downtrend and a bearish trend on Pfizer. Now, bear in mind that Pfizer is a growth stock, and these kind of stocks usually do come back. It is a very, very good stock to hold over a long term, simply because it does have a large yield. Pfizer has about a 6% yield on its stock. Over here, as you can see, 6.18% yield on its stock. However, it has a 6.81% yield, but its PE ratio is so high, compared to any other stock in this market. These PE ratios are really high, and it does beg the question: is it worth holding the stock just because it has a current yield of 6.8%? In my opinion, I would say, if I was a CEO, I would cut these yields in half, or maybe less than half, and try and put the money into research and development. Not to say they're not. Pfizer right now just bought over a company called Segan that works with cancer therapeutics, and they're hoping that this company will bring in significant value and increase its revenue over the short period. One interesting fact is that it does have the highest revenue reported amongst its peers for the first 9 months in 2023, which is interesting. They're also banking on 1 in 3 people having cancer in their lifetime, which is pretty interesting. It begs the question: do you really want to invest in a company that is willing and hoping rather for people to have cancer? And this is a proper stat. I do get that it is a stat that says 1 in 3 people will be diagnosed with cancer in their lifetime, which makes it a bit suspicious after COVID. Nonetheless, we will go on, and we will see that they have a few things in their pipeline that they're hoping will go through and increase their revenue. One of the things they say is seasonal vaccine combinations. I don't know how far that's going to go take them. I don't know who would be depending on an investment like this and hoping that people keep taking their vaccines. But other than that, there are a lot of worrying signs about Pfizer. They took over Segan, which was a huge deal for them, a $43 billion deal with Segan, which is pretty large. Their gross profits after after COVID just kept going down, plummeting. And yeah, so there's still a significant downtrend. Yes, there is a slight improvement over here. They did almost sort of the $2 billion increase in gross profits from the last 2 quarters. But their net income just fell off a cliff after 2023 March, and it just kept going down and down, and they were actually losing money towards like the end of 2023. That's why they say they were the highest in the first 9 months of 2023, because after the 9 months they were actually losing money, and they're not even cash flow positive at the moment. So that is pretty worrisome. And it's not really one of those investments where you would say if you keep holding, you will make significant amount of money. You would rather put this money into a stock like a Palantir or Microsoft or a tech company, S&P 500, that will give you more returns over time, because these kind of companies do depend on innovation, research, and development to go their way before anything actually impacts their stock very significantly. So yeah, that's Pfizer. Thank you very much for watching, guys, and please do subscribe and like the video if you enjoy watching the video. Thank you very much.